What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks to those who continue to tune in, especially after the weekend video where I was a little under the weather, but feeling a lot better today and ready for the nightly video. If you haven't already, make sure you hit that subscribe and notification button. That way you are alerted to when we release new videos. We do release bonus content from time to time, but the nightly and weekend videos, like tonight's video, focus mostly on identifying triggers and targets for trades ranging from everything from intraday scalps and day trades up to long-term swings or leap trades. So if you do want a deeper dive into exactly how we set up our charts, check out that bonus content I was talking about. There's a couple of videos that dive deeper into the broadening formations, levels of support, color coding for the different time frames, things of that nature. And if you want some more free information about the strat, which is the base of our trading method, check out the link for the free PDF, a quick reference guide in the description of this video. But anyways, I encourage you to watch the whole video. We do give the triggers and targets for the next day, but we give some pretty good insight into price action on all time frames. So let's go ahead and get into the agenda for today. We'll go ahead and recap the price action from Monday, December 29th, and then we'll zoom out like we always do to level set and look at the week, month, quarter, and year price action. Then we'll zoom back in to set the 4-hour markers, the triggers and targets for tomorrow or Tuesday, December 30th, depending on when you're watching this. And then we'll do a quick review of the week, month, quarter, and year triggers and targets. So just looking at the price action today on the 5-minute time frame, like we start out normally with, this is where we identify or take advantage of a strategy that we use to get into early scalps in the morning or early entries into a longer day trade. Get that early entry into the direction that the price action will take us throughout the day. This is where we have a strategy, right? We identify our 4-hour markers, which are on today, the chart up here today at the top. You'll see the previous high a day, and then the overnight high, this blue dashed line, previous low a day, and then the overnight low. We have to wait until the price action starts being traded for the day to mark our opening print, but that is the last of the 4-hour markers. So that's the previous high a day, overnight high, previous low a day, overnight low, and then opening print. And what we look for is we look for higher lows at or above this opening print level to get into calls, and we look for lower highs at or below this opening print level to get into puts. And you can see today, it was a choppy day. It was didn't really go anywhere day. It was a slow grind up after a little bit of volatility in the morning. So we can see that we did open here at this 42.98. So that's not only the opening print for the day, but that is the opening print for the week. And we pushed up and we got a higher low basically at this opening print level. It is a little bit below, so there is a little bit of added risk there. We could always push up and reject here just to fall back down for a lower high. So this would be considered somewhat of an early entry if we're following the strategy to the T. But we can see that we got the higher low. We did get the lower high, but off of a major level, right? This last week's 50% level, this purple dashed line. We talk about this line every week, almost every day of the week, just depending on how price reacts off of this level. And you can see initially here we got the rejection. So if you wanted to exit, as soon as we went below the low of this last candle, right, and mark this as a 2-up, the lower high, you could have exited right here, slight profit if you're looking for just a scalp opportunity, but you could hang on to see if we were going to make a higher low, and that's what we did, and off of another major low, horizontal level, that opening print, right? So we did make a higher low. It was followed by a lower high, but another higher low. So just consolidation. Once you get that higher low and a lower high, It's just consolidation. We were able to push up to make a higher high, but then again rejected off of that major level. And you can see how we just played with that level basically all day. We were able to break through it at the end of the day, pushed up, barely closed within the previous day's action, Friday's action, but we do have this almost lavender long dash line going down here at an angle from upper left to lower right. Not that steep of an angle, but this is a downtrend line on the 1 hour. So we do need to be aware of where we are on the charts. If we zoom out a little bit here, let's take a look at the 1 hour, and we can see. Let's get a better chart, a little more clear chart here, right? So we did, we got to look at this here as kind of just a consolidation pattern, right? Because although we were making higher highs and higher lows, these were soft higher lows, right? They're part of 3 candles or engulfing candles, so we consider those soft higher lows. So we consider we can consider what we did today as making a higher low if we're not counting these soft higher lows here, right? We have this higher low right here in the order. Let's make this so everybody can see it there, right? So we do have this higher low here. Then we've got this, soft higher low, soft higher low, soft higher low as we just consolidate here, and then we kind of push down. So in relation to this, more solid higher low, we have made almost a higher low, right? The reason why I say almost is because we have not gone above the high of this candle, right, to really lock this in as a solid higher low, right? We could make a lower high here and either consolidate and go sideways or continue to push down to start a downtrend, right? Because this could be considered a lower high to this soft higher low. So technically, I that's what I consider it, and that's why that line was there. So if we, wrong tool here, right? So if we make this a little bigger, right? So we can say that this high goes to a lower high, and you can see we're right up under there. So let's bring out the other chart so it's already on there. So what we would look for tomorrow is a gap up, or not necessarily a gap up. We want to gap up from where we closed, right, up over this 1 hour downtrend, right? It would be nice if we could get a full gap up, right, and close above open above where we closed. Open above the high of today. That would be even better. That would really be looking for there a higher low at the previous high day. At that point, gap close reversal at that point to make a higher low to really solidify that we have beat this 1 hour downtrend. But we need to watch that overnight action. Currently we are down slightly overnight, so we could just reject off of this level and push back down, retest last week's 50% level, and see where we go from there. If we zoom back out to the 4 hour, let's go get the right charts here, and there we go. If we go to the 4 hour, we can see, remember we talked about in the weekend video that we were set up with that 3-1, which would put into play either a possible 1-2 up, 2 down, or a 1-2 down, 2 up. So we did get that 2 down, somewhat failed 2 down. You want to say failed 2 down from the standpoint that is green, right? You opened above where we closed above where we opened, but it wasn't any type of like hammer candle or anything like that. So more of a doji here. We're able to push back up, so we got the 1-2 down, didn't quite get the 2 up here. So we've got to see tomorrow, does this extend to give us a 1-2 down combo 2 up? But even if it does do that, there's not a lot of magnitude to that move, right? The magnitude is not the high of the 1, but the high of the candle to the left of the 1. So we would just be coming back to last week's high. Do we hit that as resistance? That kind of lines up with this daily broadening formation, this diagonal line here, orange line right here, right? That also puts into play a 1-2 up, 2 down for tomorrow's session, right? So it could just be a chop, right? We're inside on the week so far. We haven't determined a direction yet, right? Because we talk about how we react to that 50% level, right? We haven't rejected it totally, right? We did push down below it, but it's not like we got this 2 down and another 2 down, or even a red 1 inside candle in the second 2 hour of Monday's session, right? We're closing just right around it, right? We've also got this this solid red line here that's, you know, pretty faded, but it's the 100% fib extension of the bull flag from the April 7 low. We'll look at that here in a minute on the week chart, but that's, you know, acting as a major resistance here as well. And you can see if we look to the left, you know, it's been somewhat of a level of resistance and support as well, especially intraday. A little bit here, kind of fell through it here, but a little bit intraday support resistance. You can see where the candle ends, where the candle starts and ends. You know, where the candle ends, where the candle ends, where the candle ends. It's kind of a magnet, right? We've got that going across here. So we want to just, you know, watch out for more chop. We've got a little bit of economic data being released tomorrow. There's, I think it's like housing numbers or something at 8:45 Central. But the big thing will be the FOMC minutes in the afternoon that get released. So we'll see what we have in store there. So just watch for a little bit more chop tomorrow. Continue to be patient. If you are a scalper that, you know, is able to thrive off of those smaller moves, you know, keep doing your thing. I would never want to tell anybody to stop doing what works for them. But we're looking for a little bit larger swings here, just mostly because of the time of year, right? Volume's a little bit lower. Frankly, you know, we don't feel like trading too much right now. You know, we've in between family being here and holidays and just kind of relaxing at the end of the year going into the next year. So here at the channel, we as a group, we're not even really trading as a group today. It's just kind of, or this week, it's just kind of trade what you want to. And I just decided to continue with the videos just to keep some consistency and, you know, maybe help anybody that is trading a little bit heavier this week, if that is your choice. But just recognize what we're sitting here with. A possibility to continue to move sideways with the, you know, another 1, 2 up, 2 down tomorrow, right? If we look at the day chart, yes, we put in a higher low, but just barely, and that's coming from just barely making a higher high. So we are, you know, maybe it's a flag here. Maybe we've got the flag pole here, and the flag is right here. Maybe we pop out of that, but we've just got to continue to maintain, you know, a neutral to bullish leaning posture, right? We could be setting the higher low here, but we haven't locked that in yet. Until we go above Monday's high, we haven't locked that in as a higher low. So we could just, you know, fade through the overnight and open up tomorrow, and, you know, whatever numbers or economic data is released could push us down, and we could continue this downtrend, not downtrend. Let me get my words straight. That's not a downtrend, because we're coming from a higher high, but just continued this downward action, creating this broadening formation, because that's all it would be at that point. So, you know, say if we push down here and then, you know, push up the next day to lock this in as a lower low, if we, you know, say we went to there's the broadening formation. We've got this one here, and we've got this one here, and we've got this range to work with, right? So don't want to get ahead of ourselves. We don't make predictions. We just get ready for both sides of the action. But you can see what we have here. There's the possibility to continue to go down. But if we go up, that does set the higher low coming from a higher high. So technically that is going to continue the trend up. But we need to watch this broadening formation in last week's high to see that we don't stall out here. If we look at it from the week perspective, right, we're still inside. Let's get to a better, yeah, this would be a good chart. If we look at the week, we'll look at the bull flag that we talked about, the April 7th bull flag, right? Here we are at the April 7th lows. Here's the flag pole. Here's the flag, and then if you draw some fib extensions from there, let me just highlight, activate it, right? You can see that we've got the flag pole, we've got the flag, and here are the fib extensions, and we're just playing around with this 100% fib extension here. So, you know, watch for it to be a little bit more resistance, but technically we do have this weekly broadening formation that does come up through here, so we've got more room to push to the upside. But there's that 46.79 that we talk about, well, we've been talking about for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks, right? Last year's 50% level, 46.79, this white dashed line. Enough of a resistance support level that we will, yes, we will move our yearly fib, but we will keep this particular level on the chart. Even as we move into 2026, we will keep track of 2024's 50% level until we create some type of meaningful higher low on like the week or month above that to continue to push up and show that it is actually support, because as of right now it's only acted as resistance. And seeing how it intersects with this weekly broadening formation here just above where we are at in this current week, it just shows me that if we do push up, don't expect us to just explode through this. We're going to probably see some resistance. Doesn't mean we're going to do a full pullback and try and make a higher low off of this 100% fib extension. We could just get sideways action or slow grind to the upside until we run into this weekly downtrend line. So, or I don't even want to say weekly downtrend line, because we're not in a downtrend. It's just a lower high line at this point, because we did make this higher low before we made this lower high. So again, it's neutral to bullish, right? We're getting some consolidation, right? Moving sideways in a way, just with a little bit more volatility, a little bit more range than we had here. Remember, this was 11 weeks of sideways action between 24 and 28, essentially. We could just be getting the same type of thing between, like, I don't know, like 35 and 46.79, right? Or 47, we'll say. That could be the range with these wicks that go above or below it. It could be that we're establishing the bottom of the range here at 39.16. Maybe we bounce between that and 47. But until we, continue this uptrend on the week or lock this in as a lower high to start at the very least consolidation, we just have to be patient, right? We did almost go 2 down on the week. I think we're like 13 cents away from going 2 down on the week. So do pay attention to where we are. Yes, the day was green, but we are still very close to going 2 down on the week, which would make, again, this a lower high. But coming from a higher low would just initially show consolidation. But if we do lose that 35.49, now we're looking at starting a downtrend. Okay. That's what we've got up to the week. Let's kind of burn through these a little bit quicker, because we know where we're at with these if you're familiar with the channel. If not, hopefully I will go over enough information for you to kind of understand where we are at from our perspective, right? On the month perspective, we're inside. We're towards that upper third again. Again, we got to get above that 46.79. We're pretty much running out of days, right? We've got 2 days of trading left in December to lock this November in as a higher low. If this is an inside, if we do close an inside candle on December, excuse me, then that it's kind of like how we were looking at the 4 hour on Sunday, right? Even if we go 2 up in January, that does leave on the board a 1, 2 up, 2 down. Now, if we go 2 up and go above this this high here that we made in October, then we are continuing the uptrend, at least with the higher low and a higher high. So a pullback wouldn't be that big of a deal. But if we were to go, 1, 2 down, then we might want to look at, all right, how does we finish that 2 down? Because are we going to get that 1, 2 down, 2 up to continue to leave this locked in as a higher low and continue to push up? Or are we going to continue to pull back a little bit more? Do we go fill this gap? Because technically, we've still got down to this 2350-ish level before we're really threatening a lower low. But even at that, again, we talk about the 3 candles or the engulfing candles. It's more of a soft higher low here anyway. So I think the door's kind of wide open as to the downside if we do get some type of catalyst to start pushing us down. And again, it's not going to be totally the end of the world, even if we do get this big pullback, because technically there's not really any support structure in here. And we would only be setting some type of more concrete higher low than this 3 here. So, don't look for 2026 to be like, the whole year of 2026 should just be some extension of this run that we've had in the second half of 2025. Allow some time for this move to be, digested by the market, right? There's still plenty of catalysts to the upside, but they're not as heavy as they were coming in before. Nvidia is still doing its thing, but more along the expected lines, things of that nature. So we just got to continue to watch these things and keep an open mind to there. Could be some more pullback, and if we do pull back, it's not the end of the world. Looking at the quarter, right? We are still in this 1 combo 2 down, combo 2 up. As long as we're above this 36.15 level here, then that magnitude for that one combo two down, combo two up is up here at this 70.08, right? It's not the high of the one, it's the high of the candle to the left of the one. So we are, as long as we're above 36.15, we're still looking to reach that 70.08. We talked about it when we first broke above that 36.15 and at the beginning of quarter 4, 2025. It's not going to happen in one quarter. Probably won't even happen in 2 quarters just because of the distance that we've had to go. Yes, now we've made some great strides, but there's still a long ways to go, right? Almost a double up. So we've got to continue to be patient. We've got a gap up here to continue to act as a magnet, but you can see this monthly broadening formation that comes through right after the gap, or right at the gap, right? And then we've got this 200 fib extension from that the bull flag from the April low. So it's that $60 to $65 level we want to look for. If we do make a break, at the beginning of 2026, look for a little bit more resistance at that 60 to 65 level. But as far as we're considered, everything is looking good as long as we're above that 36.15. Now, if we go 2 down in the first quarter of 2026, that's where we're threatened a little bit more, because that locks this in as a lower high, and that's coming from a lower low. So that technically would start a downtrend. All right, and then we've got plenty of gaps to the downside to be filled. Long ways to go before that's on the table, but again, just keeping in mind what could be there for right now. We're just looking to get that 70.08 on the year. Made a big turnaround, right? Just like we're in the 1 2 down 2 up on the quarter, we did actually trigger a 1 2 up 2 down on the year. Now we were able to didn't reach magnitude, so we technically are making a higher low so far. Nice green hammer candle for the year. Just want to continue to push up through the end of the year. Just a couple days left. Give us the best chance that we have to go 2 up at the, as soon as possible in 2026, which will trigger this 2 down 2 up, which takes you to the high of the candle to the left of the 2 down. So that's again that 70.08 level. So we're looking for that magic 70.08. All right. By now we're kind of beating a dead horse, especially if you watch these videos often. Let's go ahead and get into setting the 4-hour markers, and triggers, and targets for tomorrow, Tuesday, December 30th. All right, let's first just point out our 4-hour markers, and those would be, let's get this all queued up. All right, we've got the previous high day up at the top of the chart, overnight high, just slightly below that. Overnight low currently is lining up with last week's 50% level, and then we've got the previous low day down here at the bottom of the chart, right? So just real quickly to again go over our strategy for early trades or getting into directional trades, more long-term day trades at an earlier level. Let's just say we open price here. We just look for higher lows at or above opening print, and we want to target overnight high and previous high a day. At the same time, if we open here and we push down, then we get a little bit of bounce, but we make a lower high at or below the opening print. We want to get to puts, targeting overnight low and previous low a day. So obviously, if we open here, there's not a lot of magnitude to get to the overnight low. You'd be looking for previous low day. Now you want to keep in mind your support levels, which are overnight low, which is lining up with last week's 50%. The week flip or the opening print for the week is here as well. So watch those levels to be levels of support intraday if we do push to the downside, but ultimately your goal would be previous low a day. Again, overnight high, give you a little bit more magnitude. If we were to open somewhere in this area to the upside, to be a little bit more magnitude to take overnight high, right? If you're at the money, in the money, have multiple contracts, might want to scale out or even just exit the whole position there, as it does kind of line up with this 1-hour downtrend line. But the ultimate target would be previous high a day. So that's where you would get that the wick on like the 15 or 1 hour that pokes through and gets the previous high a day, but then the body ultimately closes below the hour downtrend line and you continue to push down, right? That is a possibility. Now, price could open anywhere. Say we push down and we open basically at overnight low, right? Then your inventory correction is probably going to be to the upside first, right? If you open where price has ended, there's going to be probably a lot of overnight traders that take profit at that point. We talked about this before. Not as much overnight range here to be talked about, so I don't think it's that big of a deal for tomorrow. But just watch for that. If we do open right at overnight low or overnight high, watch for the initial price action to go back, retrace where it went overnight before you get that morning bounce, right? So Basically, what it comes down to is watch for your opening print. If you get higher lows at or above opening print, look to get into calls. And if you get lower highs at or below opening print, look to get into puts, right? Let's get to the 4-hour chart here for a little bit longer of a intraday trade, full day trade type of action. If we look at the 4-hour chart, just as yesterday, Friday, we were left with a 3-1 to give us a possible 1-2 down, 2 up. We're left with the 2-1 after today's price action or Monday's price action, which puts on the table a possible 1-2 up, 2 down, or a 1-2 down, 2 up. So could go either way, even if the first candle of the first 4-hour candle of the day goes in one direction. It is quite possibly just a setup for the overall reversal, right? So if we do go to the downside, initially, we break the low of the second 4-hour candle from Monday, you would want to enter puts targeting previous low a day, right? Decent amount of magnitude there if you've got multiple contracts at the money, in the money. To the upside, not quite as much magnitude, but again, we're looking at these choppy sessions right now, so what that move would be, even if it is a trigger on the 4-hour time chart, I would look for it to be more of a scalp type of play, right? So you would enter calls once you break the high of the second 4-hour candle from Monday, and your exit would be the high of Monday, right? So not a lot of magnitude there. Now what that would do if you get here is trigger this 1-2 down combo, 2 up, and that magnitude would be 44.79, which is last week's high. So again, daily broadening formation there as well. Watch for more resistance if we do get to that level. On the day chart, looking to set today as a higher low. Let's get a better chart here. What am I trying to do? There we go. Looking to set today as a higher low, right? So if we break above Monday's high, looking to push up, again, the resistance that we just got done talking about, but that would lock in Monday as a higher low, so would continue the bullish uptrend, although at a slow grind to the upside. To the downside, if we break below Monday's low, we trigger this combo 2 up, combo 2 down. Not a lot of magnitude, basically last week's low. But if we do that, then we're expanding this broadening formation on the daily chart, but triggering a lower high on the week, right? So that could trigger some momentum to the downside, and you can see the market maker's expected move low is this 41.15 level. If you're not familiar with the market maker's expected move, make sure you check out our weekend video where we go into more depth about that. But we also do have this 61.8 fib retracement of the November 2025 range here as well. So even if we do poke through last week's low, at least from an intraday perspective, look for a little bit of support, maybe at that 41.76 level, if not the 41.15 level. To the upside, again, just continuing that uptrend. Would like to see, who knows, maybe we get some type of news and we gap up, or the FOMC meeting minutes push us up through last week's high in this daily broadening formation. Would love to see that, continuing that uptrend. But again, looking at the fib retracements from November's price action, 45.47 is a 78.6 fib retracement. So you do want to look out for at least an intraday, on the intraday level, that as being a possible resistance. Okay, let's go ahead and check out the notes real quick so we can just look at the hard numbers. Again, this is for Tuesday, December 30th. There will be 2 trading days left in 2025. The close price on Monday, December 29th was 43.82, and we know that the price opened at 42.98 for the week, right? So we know if the week is going to go red, we've got to go below 42.98. If the month is going to go red, wow, I'm just noticing that still says December. I went through the whole month, or November. I went through the whole month of December. Anyways, for December to turn red, we would have to go below 39.59. For the fourth quarter to go red, 34.17, and for the year, 28.13. So don't think we run the risk of definitely not the year. Could be the quarter that turns red if we get some really bad, or not really, just negative catalyst. Could be a little bit easier to set the week or set the month red, but definitely easy to end the week red with how close we are to that. So just keep that in mind. But for now, we are in full time frame continuity to the upside, meaning all time frames are green. We know that the week's expected move, market makers' expected move, was plus or minus $3.06 from Friday's close price, giving us a range of 47.27 to 41.15. We talked about that a little bit just a second ago looking at the charts. And of course, we always keep our gaps to the upside and to the downside in our notes, so we've got them for quick reference. We talked about from a scalping perspective or an early entry perspective on a swing. We want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. On the 4-hour chart, we talked about if we go 2-1, 2 down for a reversal, the trigger is 43.10 and the magnitude of that move is 42.35. If we do reach that 42.35, we do have an extended target of 41.76. To the upside on the 4-hour, if we go 2-1, 2 up, that gives us a continuation triggering at 43.97 with a magnitude of 44.33. So not a whole lot of magnitude there. We've got an extended target of 44.79 out there for you. On the day chart, if we go 2 up, or if we go 2 down on the day, that triggers a 2 up combo 2 down. That triggers at 42.35. Not a lot of magnitude there, 42.22. But we do have the extended targets, that 41.76 that we talked about as the 61.8 fib of November's price action, and we've got some other extended targets out there for you if we continue to push down. Now, if we go to the upside, that triggers a 2 down, 2 up reversal, triggering at 44.33 with the magnitude of 44.79. So again, not a lot of magnitude there, but we do have some extended targets out here for you. On the week, I guess from here on out, we'll just stick with the notes, and we've looked at the charts enough. On the week, we are inside on the week, but we are very close to going 2 down. That would trigger a 2 up, 2 down at 42.22 with the decent magnitude, a move of 39.16. If we do reach that magnitude, magnitude of that is 35.70, but because of how big of a move it is, we have an intermediate target of 39.16. If we break through that 39.16 with any type of momentum, look for the magnitude of 35.70. That's again a very big move, but if we do continue, if we get some devastating catalyst before the end of the year, before the end of the week, then we do have some extended targets listed out for you as well. At the same time, again, we are an inside candle. We just want to be ready for both sides of price action. We talked about the downside, but to the upside, we would trigger a 2 down combo 2 up at 44.79 with a magnitude of 50.09. And because it is such a big move, right, we've got our intermediate targets listed for you here. And if we do reach that 50.09, we do have one more extended target of 50.76, which would give us the higher high on the month time frame, which is really what we would be looking for, locking in November as not only a higher low, but getting the higher high on the month before it ends. But $7, $8, or $6, $7, SOXL can definitely do that in 2 days. Is this the week to do it? Holiday shortened week, FOMC, who knows? It's out there. We've got our triggers and targets out there, right? The month, we are still inside. So, the trigger to the downside, decent sized move to the downside in order to trigger that. Same with the upside. So I'm looking at the month probably closing inside, or a 1 candle. On the quarter, right, we did trigger this 1 combo 2 down, combo 2 up, above 36.15, right? The ultimate magnitude is 70.08, but we realize how long of a trip that is. We do have our intermediate targets. We did reach these first 2 early on when we triggered that 1 combo 2 down, combo 2 up, but at this point, we're just trying to reclaim those levels and use them as support, right? On the year, we talked about how we did trigger the 1 2 up 2 down, but we've reversed it, making a higher low, nice green hammer candle, and things are looking pretty good to finish out the year like that and give us some momentum going into the beginning of 2026. But that is what we have, your triggers and targets for everything ranging from scalps up to the 1-year chart. We try to look at things on both sides of the equation, the bullish and the bearish side. So we hope you enjoyed it. We just tried to pack in as much information as we can without taking up too much of your time. So we thank you for making it this far with us. If you did make it this far, give us a thumbs up if you don't mind. It's free. We try to provide as much free information on this channel as we can. So we just hope that we could get a thumbs up in return to kind of help show how we're affecting people and where we're helping. So if you have any comments to help, maybe make this video a little bit smoother in your opinion, definitely let us know. If you want us to dive a little bit deeper into certain parts, let us know, and we'll try to accommodate for as many people as we can in what we're delivering here. But anyways, on this holiday week, again, thank you for joining us. Thanks for tuning back in. If this weekend's video was your first video to tune into, because I was under the weather that day, so I do appreciate you tuning back in, and we look forward to getting out there trading again. So we'll just end today's video like we normally do. If you're watching this Monday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Tuesday morning or Tuesday during the day, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.